Hey, real estate investors, fund managers, syndicators, and capital raisers. If you're struggling with falling short on your capital raises for your real estate deals, if you're also struggling with finding investors beyond your network of friends and family, if you are spending thousands and thousands of dollars and weeks on end to travel to conferences to try to find investors, only to find that the people at those conferences are also trying to raise capital from you, so you're not getting any traction. And if you're really struggling with predicting how much capital you can raise from a deal, because investors say they're going to wire to your deal and then they back out, and you are completely exhausted, hey, I've got you. Hit the subscribe and follow button, and I promise I will deliver free content to you every single week that's going to help you level up, make this capital raising game much better and more efficient. And we're going to do that week in and week out for you. Raising capital for real estate investing. Everyone, welcome. I'm so excited to welcome you to a coaching episode today. It's always such an honor to be able to add value to our guests and, of course, to the audience. For those who may not know me, my name is Amy Silvis. I'm the founder and CEO of Silvis Capital. In addition to connecting investors to hands-off commercial real estate opportunities, I love to teach people how to raise capital. More importantly, today, we've got Christy Schnurl joining us, and I couldn't be more thrilled, not just because she's a fellow Trojan, but I'm really excited to welcome her to the podcast today for y'all to get to know her a little bit more. Christy, welcome.
Thank you. And thank you for that wonderful welcome. I'm so excited to be here today.
Oh my gosh, full transparency. You've been so gracious. We scheduled this twice before. I had an internet outage. I got sick and lost my voice. And Christy's just like, hey, sure, we'll reschedule. So I just want to publicly acknowledge you for being so gracious and understanding life can get a little bumpy, and you've been really kind. So thank you.
Absolutely. Yeah.
Well, tell us a little bit about yourself for those who may not know you.
Yeah, sure. So I have been in the multifamily real estate space now for about 18 years. So I started with 5 years working for a private syndication firm. And during my time there, participated in about 300 million in closed transactions, focused just in the acquisitions departments. That's where I learned underwriting and due diligence reviews, partnership negotiations, all that good stuff. We worked with institutional level investors there, all the big banks and insurance companies. Then I kind of transitioned, still stayed within the multifamily space. Over the next decade, I started working with my father, who had founded a consulting firm. So that's CDK. I'm still with him over there. And what we do is we help multifamily and commercial developers to build cost-effective projects. So reducing their construction costs, looking at design, building in the most cost-efficient and design-efficient way possible.
Okay.
And then a couple of years ago, I founded Opal Equity, and that was really kind of bridging those two pieces together. So it's helping people understand and realize that these kind of investment opportunities exist in the multifamily and, kind of the real estate space. How does the everyday person put their money to work in those spaces? So that's really where Opal Equity came out.
So impressive. Wow. And in between, you grabbed an MBA at our alma mater. It looks like I just missed you. Right when I graduated, I think you came into the program. Is that?
Oh, no way.
I know. Yeah. I graduated in 2009. I think you started in 2009.
Yeah, I was still working for the syndication firm at the time. So I was doing that full time and then evenings. At the time, I was living in Orange County, and they have a satellite campus there, USC does. And so I did the core first year program in Orange County, which was great because it was right down the street.
Yeah.
Did that in the evenings. And then the following 2 years, I would commute up to LA to finish the program while I was working.
Impressive. What an impressive background. Wow. Amazing, amazing. Yeah, well, let's jump into it. As a reminder for our listeners, we here at the podcast have 4 phases of capital raising. Some of you may be able to say this by heart, and other people that are newer to the podcast, you may not know what I'm talking about. So I'm going to go over that just really, really briefly. Christy can tell us where she is in that space to kind of give us context, and we'll dive into her questions. So phase 1 is the fear zone, where you've had little, if any, success raising capital. You kind of feel like an imposter. You're terrified of asking friends and family to invest. You don't really have deal flow. So you're truly a beginner. pipeline purgatory, you've got a raise or two under your belt, mostly from friends and family, but you realize that the friends and family are tapped out. So it's time to go to raising from strangers. Maybe you've got a CRM and some systems, but your pipeline is still a little bit unpredictable in terms of the deals that you have, and forecasting your ability to raise capital feels pretty tough. Phase 3 is the bottleneck breakpoint where capital raising is consistent and your confidence is growing, but the amount of capital that you're raising has really plateaued. And your deal flow is good, but it's still not quite where you want it to be. Investors may go cold in between deals because you've got nurturing gaps. And then finally, phase 4, the confidence zone, where capital raising feels predictable. Each raise grows in size. You've got reliable deal flow. Your systems are professionalized with automation, and really raising capital supports your lifestyle freedom. It feels easy, scalable, and fun. Christy, do you see yourself in any of those phases? If so, where?
Yeah, I would say that right now we're probably most closely identify with the second stage, the
Okay.
pipeline purgatory, I think you
Yes.
called it. Yeah.
Makes sense. Makes sense. So maybe most of your raises have been from friends and family, and you're transitioning into figuring out where you might be able to source capital outside of the folks you already know.
Yeah. Yeah.
Makes sense. Okay. Appreciate that. Great. Well, let's get into your questions. I'm looking forward to being helpful to you today, Miss Christy.
Sure. So I would say one question would be, and I think the way that Opal Equity that we've approached capital raising so far, and I think this is where I'll preface it by saying that although we are always kind of fostering those investor relationships, we're not always raising capital, right? Like there's not always an opportunity, and we're really picky about the types of opportunities that we take on.
Smart.
And one of the reasons that we do that is because we are not looking, at least at this stage, to be actively involved in the deals. We structure as a fund of funds.
Mhm.
And so we look for really high level experienced operators that know the asset classes, that we're investing into, and then partner from there and look for the right opportunities. So I guess one question that I would have, and I ask this from a lot of people in the space in general, not just around capital raising, but like, what for you do you find that is a good way to approach and to continue to build and foster or find those right operators? Because so many people look good on paper or look like they have this track record, and sometimes it's hard to tease behind
Ooh.
like behind the scenes and what is happening back there,
Yeah.
to put your trust into someone to invest with them.
Wow. Yeah. Never been more relevant than here in mid to 2026, right?
Yeah.
Yes, it is incredibly important. I love that. Well, in my experience, because quite frankly, I've had both ends, and what I've learned from those partnerships that have been successful is those kind of referrals from other people who have the behind the scenes knowledge. So whether they've partnered with these people before, passively invested with people before, unfortunately, this isn't like, and I don't have to tell you, but just for the sake of saying it, unlike the public markets, right, where we've got full transparency and it's easy to see, these private markets are significantly more opaque, but taking advantage of how small the industry is and, yeah, asking around. I've found, at least, and let me know if you agree with this, but we're often only 2, maybe at the worst 3 connections away from almost anyone in the industry. So being able to, yeah, see who's had experience. Also, in addition, doing background checks. I think there's nothing wrong with it. May be not cost effective, but hiring a private investigator, doing background checks, asking for financials and proof, even if they're audited, maybe in that respect, can be really helpful as well. So the networking aspect, people who have actual first-hand experience, and then doing investigations. As creepy as that sounds, I think it's really necessary. It can be really helpful.
Yeah, absolutely. And I think that those are definitely good recommendations there.
Yeah.
And
Yeah.
although it sounds creepy to do, investigative work, I think
Yeah.
it's probably important to recognize too. It's like that's very common in the industry to be running background check. Like if you were doing large scale commercial real estate deals, you
Yeah.
were used to having a lot of people running background checks
Oh,
on
yeah.
these.
Yeah.
You're,
Absolutely.
you know, lending, doing any of that stuff. So
Yeah. Yeah. I know in our mastermind as well, we foster kind of that sense of community too. So being in groups. I mean, I'm not necessarily my own mastermind, we do it, but finding groups of connections, not just casually, but really formally, where knowledge is able to be shared, networks can be shared, and connections made is a nice way to really formalize that as well. I know we do a lot of referring to trusted partners and exchange of information there too. So there's definitely ways to do it. It takes a little bit more effort, but yeah, the downside of not doing that, I think you are so smart to ask that question.
Yeah. Well, thank you. I appreciate all of that.
Of
That
course.
feedback, that's always top of mind for me. And it's just
Oh,
getting as many perspectives on that because sometimes, you get feedback or other ideas you hadn't thought about. And so we're always looking, to grow those relationships and then also
yes.
look at other ways that we can kind of vet those.
Yeah.
Mm,
Yeah. Brilliant. Really, really smart question. Thank you for
Thank
asking.
you. Yeah. Let's see. One of the other questions that I'm curious about would be kind of what your experience has been over the last, probably especially the last 12 months or so.
Yeah.
Because I'm finding from a marketing perspective, even from an information standpoint, like there's so many things happening right now,
Hmm.
even within real estate, but also within the greater like AI. We have like information and
Yeah.
misinformation, all of these things that are kind of colliding right now.
Yeah.
And I'm curious maybe how that has impacted your capital raising or other people that you know and recommendations for how to move through this space in
Yeah.
terms of, you know, that as well as different channels that are used.
Yeah. So I think you're alluding to like what in the World War III is happening on the world stage. Interest rates may be going up, the new Fed chair, and then also in our space, deals, going bad. And yeah, maybe the part of where we are in the market cycle. Is that kind of what you're
Yeah.
referring to?
Yeah. And I think
Okay.
it's kind of what that communication looks like in general, coming from, going to current investors as well as potential investors, and
Yeah.
then, how you're transparent with things, but not freaking everyone out every 3 seconds with
Yes. Yeah.
everything happening.
Oh, I love this. I'm coaching a guy that I like a lot one-on-one, and he's in the middle of a raise. And we were talking through kind of exactly how to do this. And I think this isn't just for when you're actively raising, but also in between deals. Yeah, I think it is imperative that all of us call out what's on people's minds. I think it's really creepy, even though I understand why. I think it can be really creepy to folks if we're just acting like, oh, everything's amazing. You put your money in real estate, it only goes up, and gosh darn, we're all happy and everything's going fantastic. I mean, it's obviously not truthful, not ethical, but I think it really rings untrue as it should to potential investors. So, one of my main tactics and tools that has worked really, really well and actually enabled me to raise more capital than I ever have over the past 12 months is doing webinars with investors and really calling out, this is what we're seeing. So let's talk about what this is. Let's talk about what it means. And let's talk about how this integrates into what I'm doing or what you all potentially may be partnering with me in doing in the commercial real estate space. And I think setting the precedent of, look, we're not pretending that there isn't risk in investing. We all know there's risk in putting your money under your mattress. It's called inflation. There's risk in this space too. And should you choose to invest in this space, here are the risks. Let's call them out. And more importantly, how do we mitigate them? So really walking folks through, hey, interest rates might go up. I mean, we don't know. Maybe they'll be cut. I have no idea. So are we buying fixed rate debt that's a bit longer term? Okay, that might be one way to mitigate risk. Hey, AI's coming and we're not really sure what that's going to do to unemployment. We might be investing for 5 years. Goodness, 2031 might look completely different probably than 2026. So how are we mitigating employment risk for our residents? Well, we're investing in areas where there's a broad diversification of industries so that we can hedge our bets and understanding where are our current residents employed so we can do, deal analysis. But you get what I'm saying.
Mhm.
Really, really specifically calling out the risks, talking about how we can mitigate them, and acknowledging things that maybe we can't mitigate. Like, hey, I can't mitigate interest rates. We can on the debt side, but nationally, like if they jack up interest rates and there's a black swan event a la the global financial crisis, yeah, it's an outside risk. We will do what we can, but nothing is ever completely secure. So I love that you said not kind of scaring everyone, to the point where they don't invest, right? Because you're probably like me, you want to be transparent, you want to be open, but we can all be safe and secure and just kind of sit on our hands and do absolutely nothing. So then tying it back to some of the risks of doing nothing and calling those out too, right? Of what
Mhm.
inflation can do when it reaches, it's the highest it's been in a couple years now. What could that mean to the money sitting in your bank account? So I think being balanced, being fair, giving folks an equal kind of viewpoint of what's going on has been incredibly powerful, not only for me, but the students I work with as well.
Yeah, thank you for that. It's interesting because you said webinars, so that's kind of a second piece that I want to ask about in terms of
Okay.
that channel, because I know, like, for us, we do a monthly webinar. It's usually kind of an educational topic or something, and it's, free Zoom, come and whatever. So,
Yeah.
the attendance rates, I think, of those, or actually the registration rates, were much higher a year ago. And I've
Yes.
noticed this downward trend where, especially in 2026, we're really seeing kind of a big drop in those, at least for us. So I'm
Yeah.
curious if that's something that other people, have experienced as well. It just seems like even other independent Zooms that I have jumped on, or these webinars, some of them seem like they're lower than they used to be.
Yeah. Yeah.
Um, so are you experiencing that at all? Or
I'm experiencing some less live attendees and more people watching the recording, which candidly I get. I do that too. My time is busy, you're busy. If I can consume some information at 2x speed, I'm absolutely going to do that rather than attend live. But yeah, I mean, giving people incentives for attending live, the ability to answer questions and interact is always a nice thing to point out, that I think that's helped us increase our live attendance rate. But yeah, I think, making sure that we keep these topics fresh, them topical, reaching out to our investors or potential investors and understanding what they want to understand, time of day. I think things have shifted. People were working from home and then it's returned to office. And then, there can be all sorts of things that kind of shift people around. So I guess long and the short of it, yes, we've seen a decrease in from live attendance. We've been able to mitigate it a little bit through getting feedback from folks. But yeah, it is an ever changing dynamic. And I'm positive people are just less interested in thinking about deploying capital because of what's going on in the current economic environment.
Mhm. Yeah, that's a
Yeah.
really good point.
Yeah. 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 A great question. Yeah. It's yeah, finding ways to be innovative and adding value in this space is something we all have to keep. I know but we just have to keep on top of.
Yeah, and finding that it's getting harder to deliver that value, because we are
Mm,
very value first. And
yeah.
what I mean by that is, like, email performance has been dropping, that we've seen in terms of
Oh.
some of that open
Huh.
rate stuff too, or even, from social media platform standpoints, even if you're trying to share some of the information that way,
Huh.
there's always the changes in
Yeah.
algorithms or what's performing or what isn't. So just feel
Yes.
like there's been a lot of shift, and I can't
Mm,
help but think, at least, my perspective, it's like there's such an influx of AI generated content right now and through all these marketing channels, and it's being pumped out in such a high volume.
yeah.
I can't help but think that maybe many of us, including potential investors, are feeling overwhelmed by the amount of slop that's hitting
Yeah.
their inboxes or their
Yes.
feeds.
Yeah.
And then it's getting harder to kind of break through
Mm,
some of that.
yeah. Well, the good news is I know email companies like Gmail are highly throttling AI content. So for those of us who don't use AI, who are able to push through our authentic voice, we're able to get in front of our potential investors or current investors better. But yeah, to your point, Google specifically is constantly changing kind of what their algorithm thinks is valuable, including throttling AI. LinkedIn too, thank God. I think we're all exhausted by the AI comments and the AI written posts, and LinkedIn has gotten very wise to that as well. So, yeah, authenticity could not be more valuable or more effective. So, I love it. I mean, I've had some people say, like, gosh, LinkedIn really is your thing. How annoyed are you by the AI stuff? And I don't know. I think for those of us who are authentic, it's never been an easier time to break through the noise, but that might just be my perspective.
Yeah, I I can relate with the annoyance of the LinkedIn AI. But for me, part of it is that connection piece because I find that the majority of the comments I
Mhm.
feel like are being generated by AI. And I don't
Yep.
know if it's people that have automation set up that are doing them or if they're just kind of feeding in the post and then pasting a comment. But even
Yeah.
the people that I'm connected with one to one on LinkedIn,
Mhm.
majority of commenting happening is just like regurgitating something about my post.
Yeah.
And for me, it's a little bit discouraging because I'm trying to build genuine connections. And
Yes.
if the majority of the people aren't even commenting themselves, it's hard to build that.
Yeah. Yeah. Well, I'll give you some encouragement. The vast majority of people on LinkedIn don't comment and don't post. So they're lurking, they're watching. So if you're doing all the other things right on LinkedIn in terms of hacking the algorithm, in terms of how that you put out content and what people you're connecting with and the ongoing conversations there, there's still tremendous potential to do a great job developing those relationships. But yeah, the comments themselves can be discouraging, but I assure you that's not the whole story, but I hear you. It really is. People have heard me on this podcast say it ad nauseum, so I'll hold myself back from saying, but yeah, I don't know what those people think that they're accomplishing, but they're not accomplishing what they think they are.
Yeah.
Yeah.
Yeah, and I would love more perspective if you don't mind sharing
Yeah.
on LinkedIn. I've gotten more consistent with posting over there, and I'm trying to do I default in general to more of like an educational
Mhm.
type of post.
Yeah.
So I've been trying to move away from more of that, like lessening that and more, relatable, or also I think where I show it the least that probably needs improvement would be that like converting kind of content, like giving them a call to action, really pushing people to like, hey, reminder, like here's how you can get onto an interest list or something like that. So I'd love to hear a little bit of like your feedback or advice and sort of how you balance those things or
Yeah.
for someone, especially if you're raising capital on LinkedIn and maybe inviting people you haven't met before to come into your world or to get onto a list, like what that might look like.
Yeah. Yeah. This is probably the number one question I get from people when they join my course about raising capital on LinkedIn. So I love that you ask it because it's so, so important. Leading with education is key. You hit the nail on the head. Most people though, I would say that want to raise capital on LinkedIn focus very, very heavily on kind of the nuts and bolts of real estate investing, which is important. I think that is one pillar of probably three that effectively works on LinkedIn. The other thing to pull back and kind of zoom out on is when people read real estate content, they're often wondering, how in the world does this apply to me? So taking a step back and thinking, well, what are some of the goals, the pain points, and the fears that people have that lead them to want to invest in real estate? How are we helping them? So whether it's talking about, for some it's tax mitigation, some it's, having a second stream of income because they're getting older and they're worried, gosh, if I get laid off, what in the ageism is going to happen to me? Am I going to be able to get rehired? Having multiple streams of income. Other people, it's diversifying from the stock market. So one of the biggest mistakes I see people making is hammering educational content on real estate when we got to take a step back and really understand the goals, the fears, the pain points that lead people to real estate. Start there. That's what draws people in. And that's generally the content that converts people to then ask, okay, well, tell me more about real estate. How does this fit? But letting people know that we see their goals, fears, and pain points first. So that's kind of the first part of your question. And then, yeah, what converts and gets them on to wanting to be on your list or something like that? That's truly about 5% of the content, maybe 10%. But having lead magnets is really it. So just saying, hey, are you interested in real estate? Join my list. Eh, but here's a checklist of what your financial advisor, may be telling you that you may want to dig in deeper, when they say real estate's too risky or, oh, only stocks, bonds, and mutual funds. Adding some sort of value with a checklist, with a ebook, with a webinar that can capture their information with their consent, of course. That's the type of stuff that really, really converts. So it's right in the same vein that you mentioned of education, but it's something they have to sign up for, they have to opt in for, and that's where the beautiful nurturing can begin.
That's great. And so you're saying when you're saying 5 to 10% with that, is it 5 to 10% that you recommend like your post is about those lead magnets or
Mhm.
that you're including those at all in comments or a call to action at the end?
Very rarely including it in comments or calls to action. I think people aren't wanting to go on LinkedIn to be sold to, and they know, they know
Mhm.
what the deal is. So yeah, really hitting them around 90% of the time with valuable content. And then yeah, 5 to 10% of the time your posts are about, hey, if you're interested in these topics, here's one of the, the things that might be able to be helpful to you and using that. And then of course in your profile, having a lead magnet as well. So when people go and want to learn more about Christy and what she's all about, that lead magnet is there for them to click on as well.
Okay, that's great.
Yeah, great question. I love that. It's a delicate balance, but one that when you hit it, ooh, it's good. It's good. It's good.
Yeah. Yeah, that's one that I definitely need to incorporate more. I think when I've done it in the past, it's more of like a value or a educational or value heavy post. And then it's sort of that like call to action at the end of like, if you want to keep going, like here's, this thing you can grab or go here,
Yeah.
but not like a standalone, something that's really like describing what the value of that thing is and then encouraging them to sign up. So
Yeah.
that's usually helpful.
Yeah. Yeah. I love that. It's such a beautiful thing. So really great question. Thank you.
Yeah.
Anything else on your mind? These have been so great.
I would say I'm curious about your perspective since we're on the topic of LinkedIn
Yeah.
when it comes to DMs.
Uh-huh.
Because I've seen, I don't know, there's a lot of people that I see that I think are doing sort of this like cold outreach strategy through the DMs on
Yeah.
LinkedIn. And I've heard mixed feedback in terms of if that works. It doesn't feel, my gut is that it doesn't fully align, at least in the ways I've heard that's used currently or by people that I know are using it with something that we would maybe want to do. But I don't know if there's maybe an opportunity there that we should be looking at or a different perspective of it. So
Yeah.
anything you'd add or say about that?
A woman's intuition is always right. That's where I land on that. I love that you're kind of giving voice to that, calling that out because I'm learning to trust that in myself too. But yeah, the pitch slapping with the P is not for our industry. It may work in other industries. So I'm not saying throw the baby out with the bathwater. It never works. Don't ever do that. But this isn't a $5 or $10 widget. This is $100,000, $300,000, $500,000 investment. And you and I showing up in the DMs of, hey, you've never met me. You have no idea who I am. And by the way, here's this thing that your financial planner never told you about and none of your friends are talking about. It doesn't work. We need 9, 10, 11, 12, even 13 touches for people to know, like, and trust us. And let's be honest, for some people, this sounds kind of a little scammy because they just haven't heard of it. It's not in the national zeitgeist as much. So where I do think there's an opportunity is to send connection requests to people that fit your target avatar. So if you haven't defined your target avatar, who's the person that is really your ideal investor, that's one of the benefits of defining them and sending them a connection request and talking about things that you all have in common, truly without the intention to pitch slap them down the road, but just get them in your network. The LinkedIn algorithm has changed over the past 6 months. So just because you're connected to someone doesn't necessarily mean that they're going to get your post content as regularly as they used to. But it's still valuable to reach out, connect, because they're more than likely going to wonder, who are you? Especially if your LinkedIn tagline talks about how you can help them, how you can add value. They'll look at your profile, they'll check you out, maybe even click on your lead magnet, and your posts will appear in their timeline, but just maybe not as frequently. So all this is to say, yeah, I don't find that pitch slapping works for anybody, but I do think it is valuable to proactively reach out to people, find people that you have something in common with, build that rapport, but without that expectation of strong arming them into investing alongside of you, but to just begin that conversation of education to see if it fits what they're looking for. Does that make sense?
No, it definitely does. And
Okay.
it feels more in alignment with what I would be doing and have been doing anyway. So
That's the key, right? None of us, and no shade to used car salesmen, but I don't think any of us got into this industry, to strong arm people into a financial investment and kind of feel all like, I'm going to go get you and chase after you. It repels money instead of attracts it. So your instinct
yeah.
is spot on.
Yeah. And you said something in that where you were, referencing the know, like, and trust. And one of the pivots that I've made more recently in some of the content that I'm doing is balancing with kind of bringing in more of that personal content
Mhm.
in terms of like, who actually am I? Like, what do I value? What am I building? Like, why am I doing this? Why am I involved in the things that I'm involved in? And
Yeah.
so I'm curious, is that something that you think does align in terms of LinkedIn and doing that when it's not specifically like, here's the real estate and here's what you're getting from it, but more of just because those posts, no one's necessarily commenting or engaging with as much, it's like, it's kind of more of, I view them anyway as like for the lurkers, like maybe they're curious or they're interested in the content and this is helping like see if there's a connection that they're starting to build a little bit there.
Yeah. I think so. The way LinkedIn's algorithm is changed to right now is it really wants you to focus on three subject pillars and doing that consistently week over week, month over month, and having that content align with what you talk about on your LinkedIn profile. So it verifies, is the content that Christy is posting, is this in alignment with what she says she's all about in terms of her current employment, in her about section, in her tagline, in her profile? And if not, we're going to kind of throttle that.
Mhm.
So I obviously one of your content pillars isn't going to be look at me. I mean, it's not, I know that's not what you're saying, but just for the sake of an example, the opportunity though, I think is when you use one of those content pillars and you weave in your personal story, that's where the magic is because people don't just hear. And look, I've been known to do this. I have to check myself too. I'm so excited to teach everything that I know. I can get really just kind of analytical and factual, and here's the information. And isn't this great? But people want, exactly as you said, to know, like, and trust you. So weaving in your personal story of either how you got here, how you've benefited, mistakes that you've made, whatever that pillar happens to look like, weaving that in as much as possible. Wow, that's the chef's kiss. So yeah, I think that's great that you do that. I wouldn't necessarily just do a here's who I am post on its own. I'd have some sort of tie-in to a greater purpose. But yeah, the personal stories are fantastic. Does
Okay.
that make sense?
That is, and it
Okay.
helps to know, like, the 3 pillars, 'cause I'm already thinking, like, "Okay, I should tighten that up," and because right now, it's like I do it to 2 audiences because I'm involved with CDK, it's like I have, like, the audience of, like, multifamily developers, and there's also within that space, the audience that it attracts contractors, it attracts architects and engineers, so it's like some of the content that's going towards them,
Yeah.
and then I kinda have more of, like, the syndication side for passive investors, and then I was doing more of like time freedom or sort of the goal of, of building something for the future or whatever. But it sounds like maybe dialing back that third pillar and making them more relevant to the overall real estate in there to kind of not confuse the algorithm too much.
Yeah, I think this has been one of the biggest obstacles with my students and the people I work with one-on-one with coaching is there is no more kind of multiple lanes on LinkedIn if you want to hack the algorithm and get in front of people. We really have to decide, and it's cruel. Don't shoot the messenger. I'm not saying you, but everybody listening. It's hard, but yeah, you've got to choose, which of your work experience you're going to talk about in your about section, what your tagline is going to be, and how your content melds with that. It doesn't mean you can't post other things, but everything you do on the platform will be throttled dramatically if you don't. The way the algorithm works, just to kind of reiterate in case I didn't explain it well, is that about 50% of the reach that your post gets is based on the second that you post. LinkedIn compares your post content to what is in your about section, what is in your experience section, the most recent, and what's in your tagline. And if there's a misalignment, you are not considered an expert in that subject, and it's not going to send out what you're saying. So about half of your post is based on that. The other part is, do you have a good hook? Is your graphic interesting? And, what's the dwell time? All of those other LinkedIn thingies. But the alignment with your profile is so, so big right now. So yeah, tightening that up, unfortunately, picking a lane is probably going to be your
Mhm.
best bet.
Okay. That's really helpful.
Yeah,
And
yeah.
then what in terms of graphics or images, the pairing, do you find that it's best to stick with a lot of personal images or to draw, to pull in things so that people know what the content is going to be. So when I say that, like more of them getting to know me because it's photos of like me on vacation or something or doing or working versus multifamily projects or things like that are going to draw like that. This is what it's about from an industry or expertise perspective versus this is Christy's content.
Yeah. Yeah. The biggest purpose of graphics on LinkedIn is to stop the scroll. So we've all kind of just been mindlessly scrolling and certain things catch our eye and certain things don't. Sometimes that is a personal picture, but I do know some people that that's all they do. And while we love all of you all and your faces, it's not necessarily, Insta where we want every single post to be of your mug. So yeah, whatever we can do to stop the scroll, whether that's a personalized picture, whether that's an infographic that draws people in, whether it's a headline or a quote that draws people in. I find, again, kind of like the 3 pillars for LinkedIn content, choosing 3 pillars of types of graphics can be the most helpful there. I love infographics because the second role of graphics on LinkedIn is to increase dwell time. So if we've got something super valuable that stops people from scrolling and goes, wait a minute, I need to look at this. And then there's a complex infographic that explains, tax benefits of real estate professional status versus, if you can just use the tax benefits to offset passive income and real estate capital gains. And, I want to dig into the numbers. Something like that can really increase dwell time and tell the algorithm, ooh, this is a good one. We need to show it to more people. But it doesn't have to be every single stinking time, to your point. So yeah, having a little bit of a repertoire to mixing it up is helpful. And the last thing as I monologue here, but just the last cherry on top, our potential investors may have different interests in us for different reasons. Some people might be super analytical. Other people might be more relationally oriented. So having a little bit of several pillars or styles in our graphics can be helpful. So we are hitting the different styles of people that may be interested in investing alongside of us.
Yeah, that's a really good point and a really good reminder when it comes to that.
Yeah.
I love that.
Yeah.
I haven't thought, and that's something new that I haven't heard anyone say before in terms of thinking about the images that are accompanied, like not just your content and doing, because plenty of people, I'm sure most people have heard about like content pillars and how you're kind of approaching things, but to have different image pillar and to think of it in that way, I think is really helpful too.
Awesome. I'm so glad to be able to add value to you today, Christy. This was so much fun, especially to a fellow Trojan who was so gracious with me with our scheduling. Thank you, friend. This is really, really a joy to get to know you.
Yeah, this has been fantastic. I really appreciate it.
Yeah. I'm sure folks are going to want to reach out to you. How can they best reach out to you?
Yeah, so I'm on pretty much all of the social platforms, my name, and I have a unique name. So Christy Schnurl, and it's SCHNURLE. So if you Google me on any of those, you'll find me. LinkedIn, message me there. And for Opal Equity, opalfund.com, and that's OPAL.
Perfect. We'll put all that in the show notes so folks don't have to, I learned that because I've got a bizarre last name. So it's always helpful to just click the link. So we'll put all that in the show notes to make it easy for you all. Definitely encourage you to reach out to Christy. And if you found this episode helpful, share it with somebody. We want to help as many people as possible. Christy, thank you again, my friend. This is really a delight. I look forward to maybe having you on again soon.
Yes, thank you so much.
All right. Bye, everyone. Hey, real estate investors, fund managers, capital raisers, syndicators. If you are struggling with predicting how much capital you can raise for a deal, because investors say they're going to wire, but they actually back out, you struggle with finding investors beyond your network of friends and family, if you find yourself falling short on your capital raises for your real estate investments, and you're spending thousands and thousands of dollars to travel to conferences all across the country, only to find that the people you're hoping to raise capital from are also trying to raise capital from you, hit the subscribe and follow button, and I promise y'all are going to love what we're going to cover here. I'm going to deliver free content every single week in and week out, to help you get to the next level in your real estate investing capital raises.